Let's chat about the market here in Northeast Florida. And in this video, I'm gonna share with you all the market stats. Also, I'm gonna dive into, is it a buyer's market? Is it a seller's market? Is it a good time to buy? And is it a good time to sell? So let's get into it. I'm Stevie Hahn. I'm a real estate agent here in Northeast Florida. I have a couple fun videos coming soon. A day in the life video, what you wish you knew about Jacksonville prior to moving here. And then for my real estate agent friends, I'm gonna be sharing with you all the prep that I do for my listing presentations. If you are a numbers person, you are gonna appreciate the beginning of this video because we are gonna break down the stats and they're actually very, very interesting. So we're gonna talk about Duval, St. John's, and Clay County. We'll chat a little bit about what is going on currently and especially gonna dive in deep on comparison to last year. The median sales price currently in Duval is $335,000. This sales price, the median sales price for Duval is up 11% from last year, but it is down 1% from last month. The median days on market currently are 35 days. This is up 105% from last year, and it's up 25% from August. So the median days on market last year in Duval were very, very low, and they've gone up 105% from last year. So that's telling us that in Duval County, properties are staying on the market longer. And these days on market is essentially talking about the number of days from the time that a property goes under contract, not from when it closes. So just keep that in mind. It's not within 35 days a home went under contract and officially sold. It's when buyer and seller had agreed and there is an executed contract. Okay, so on to Duval. Active inventory currently 2,565 homes, which is up 80% from last year. So we have so much more inventory. And then it's up 15% from last month. So we're getting more inventory. This is super exciting. There's 3.2 months of supply, which is up 178% from last year. County. The median sales price is $561,000. It's definitely more expensive than Duval County and Clay County. This sales price is up 23% from last year. So prices are increasing and it's up 1% from last month. So it's not climbing very fast, but I would say it's relatively staying the same from last year. So the median days on market is 44 days. This is up 128% from last year. So I would say sellers, if you're thinking about selling, do not have the expectation that your property is going to go under contract in 24 hours. The current median days on market is 44 days. 1,291 homes are actively on the market, giving us almost 4 months of supply of inventory. So this is healthy though, healthy number. We have so much more inventory. Honestly, this is a great thing because it was just so crazy the last 2 years. It was not realistic. It was not sustainable. St. John's County is in a healthy month supply market right now. Let's discuss Clay County. So Clay County is actually becoming to be more desirable. There's a more affordable price points and they have good schools. So $335,000 is the median sales price, which is up 10% from last year. The average days on market is 33 days. This is up 106% from last year. Average inventory currently, there's 789 homes on the market, which is up 148% from last year, sitting at 3.3 months of inventory, which is 252% up from last year. Let's dive into what do these numbers mean. So these numbers that we had discussed that are pulled from today, the numbers are so different today versus what they were a year ago, right? We are seeing quite a difference in the market. This time last year, we were running around like crazy. As soon as someone inquired about a property, we were getting out there immediately. Sometimes there were lines out the door, open houses. There were always lines out the door, like waiting for the house to open. It was It was insanity. And just imagine being a buyer in that market and how overwhelming that was, especially for a first-time home buyer. We were putting offers on properties as quickly as possible. So just think about trying to decide whether or not this house is for you, but feeling kind of pressured to get it in as quickly as possible. Not fun, not ideal. Also, we were having to accept properties as is. There were no contingencies. So no inspection contingency, no financing contingency. So if you decided to change your mind, you 100% lost your earnest money deposit. Also, you were not getting any seller concessions. So not getting any of your closing costs covered, not getting any warranties, not getting any kind of credits for anything, especially repairs. That was not happening. Also, let's not forget that buyers were having to pay above appraised value. So they were having to pay cash at closing over what the house was actually worth. And today, our market is not like this. And let me clarify, this does not mean that it's a horrible time for sellers. And that, oh, it's just not a good time to sell. And let me explain why. What we have experienced in the last 2 years, it truly was an anomaly, and I don't think it will happen again. The Fed had lowered the interest rates to help support the economy during COVID. It gave the opportunity to help buyers get into a home with these ridiculously low interest rates. And I am talking 2.5%. So this really increased the demand, and I don't foresee these crazy low interest rates happening again. With COVID, a lot of families and single individuals, they were working from home. So instead of continuing to live in New York, New Jersey, California, that, these places that are cold, and some places that have super high taxes, it gave people the opportunity to move to sunny Florida. That also contributed to the demand here. Northeast Florida is a very desirable area. We have great schools, the beach, military town, corporate jobs, retirees, the list goes on and on. There really is something here for everyone, and this also contributes to the demand. Although the interest rates have rose and inventory has certainly increased, it is still a good time to sell and still get top dollar for your home if it's marketed and presented correctly. Sure, interest rates have increased, but it's a healthy, normal number. The last 2 years, those interest rates were not normal, and we are still in a desirable area, and I foresee it being desirable for quite some time. Now, I want to discuss buying in this market. So let's first chat about interest rates. It's funny whenever I speak to somebody who is older and they laugh at the fact that people are taken back by a 5% interest rate. They purchased their first homes at 10+%. My first several years in this business, my clients were getting around 5%, some a little bit higher, some a little bit lower. And none of these buyers were ever saying, oh, it's such a bad time to buy and that these interest rates are so high. Nobody was saying at this 5% interest rate that it's not a good time to buy and that interest rates are too high. I just wanted to repeat myself. Now that we had experienced these super low 2.5% interest rates over the last 2 years, it puts in potential buyers' mind, oh, it's not a good time to buy right now. Although you likely will be getting a respectable interest rate. If interest rates were to go back down, guess what? You have the opportunity to finance and get that lower interest rate. If you are renting right now, you are currently paying someone else's mortgage. So why not purchase now and build equity into your home? Last thing that I want to mention about buying in this market, that you still have the opportunity to get a lower interest rate. And some ways that can help with this is, of course, having great credit, but you also have the opportunity to buy down your interest rate or to have that seller help with that cost. So let me wrap up this video by saying that there are definitely pros and cons with these two different types of market. Last year, as a buyer, yes, you got a 3% interest rate, but you had to accept that property as is. You didn't get any concessions from the seller. You were on edge and nervous the entire time because you waived all contingencies, and you have to pay above appraised value for your home, and you had to allow the seller to live in the home for an additional 2 months after closing for free, because they likely were struggling to find somewhere new. There were all of these not so great factors, but hey, you got that 3% interest rate. In today's market, we are sitting at around 5% interest rates. But now we have more inventory. You have more options as a buyer. It's not overwhelming. There aren't 30 plus offers on a home. You aren't having to accept a property as is. We are turning in repair request forms. We are also negotiating concessions for the buyer. So to me, although I did purchase last year, I would actually prefer to be in today's market purchasing, especially if I was a first-time home buyer. If you like these types of videos, comment below, like this video, don't forget to subscribe. Thank you so much for watching. I love talking about real estate and our current market. If you have any questions, don't hesitate to reach out to me. I will have all of my contact details listed below in the description. I'll see you on the next one.